that's the macro backdrop. So then we can look at some of these cycles we go through in Bitcoin. And what I have here is the the 1+ year HODL wave. We could also call it the Bitcoin distribution cycle. And what we see here, so the blue line is Bitcoin price, and the yellow line, the orange line, is the percent of coins that have not moved on chain in more than a year. And so of course, Bitcoin can be held multiple ways. Some people hold it on chain, some people hold it on exchanges, some people hold securities that are tied to Bitcoin in different ways. And this is looking at the very large snapshot of on chain, which is a very big part of the market still. And what you generally see is that during these major bull runs, all this new capital comes into the space, and some of those longer term holders start to sell into that strength. Basically, they experience 5x, 10x, 20x gains in some cases. They have these, they have these life-changing amounts of capital appreciation. They want to rebalance, they want to consume, and so they distribute into some of that strength, and a lot of that new capital pours in. And then you generally see during these more consolidation type of markets, these bear markets, you generally see the reverse. You have the longer term, more knowledgeable, higher conviction holders go back to, they become a larger and larger share of the market over time. And so what we see now is that we're back in this distribution cycle where, during the early kind of bullish period of 2021 and, the whole phase there, those longer duration holders are willing to sell into that new strength. But then throughout this consolidation that we've been in for the better part of a year, those longer term hands have not been willing to sell at these prices. And many of them are still accumulating at these prices, dollar cost averaging. Coins are continuing to go from kind of those faster money hands or those weaker hands into those longer duration, stronger, less liquid hands. And so that's generally what sets up kind of the next cycle. You have the macro events. You have basically, you can separate it into demand and supply. So on demand, you have what we covered before, things like risk on or risk off periods, how much liquidity is in the macro environment. Those types of factors can determine how much capital comes into the space or leaves the space. Meanwhile, the other side of it is the supply side. How much of the existing coin base is available for liquid purchase versus how much is locked up into very strong or illiquid hands. And what's made this cycle rather unique is that, in these prior periods when you had these peaks in demand, that was the top of the cycle. Whereas actually in this time so far, we hit a slight new high later in 2021, not because demand was as high as early 2021, but because you had moderate demand and really, really tight supply. And so there's really two sides of the market to keep monitoring. Basically different analysts, I think, focus maybe too much on just the demand side or just the supply side. And we put both together, basically what we're seeing is right now we're in kind of a weak period for Bitcoin demand, as you would expect from economic deceleration, liquidity being pulled from the market, while the supply side is one of the most bullish setups we've seen. And so that kind of can segment our expectations about maybe the longer term outlook versus that intermediate term uncertainty. And for the last slide, this is a chart from Yuri and Timmer of Fidelity. I think he's been doing really great coverage of this space. And so he has a demand curve model. Basically, you can model Bitcoin as though it's a network effect, as though it's similar to internet adoption or mobile phone adoption. And so you have this kind of, the monetization of this asset over time, that this asset acquiring a monetary premium. And so you occasionally go, way above the demand curve. You get that, you get momentum traders jumping on board. It's not like this it's not this very smooth adoption, but you go through these periods of fast or quick adoption. You can kind of model it over time. And of course, we can't predict the future, how fast things could go, what sort of inflection points, what sort of geopolitical events could accelerate or decelerate that. But it shows that, based on that model, we're towards kind of the value side of that. We're not necessarily in capitulation mode. The last time we had a capitulation was March 2020 during the COVID crash. The prior time was that late 2018 period, which was when the Fed was trying to tighten into declining PMIs, declining economic acceleration. And so, we absolutely could have a lower capitulation, but I would say that we're already kind of in what has historically at least been a valuation, kind of an accumulation phase, kind of a value opportunity. And you can look at all sorts of indicators like dormancy. It's basically another way of measuring are long-term holders selling their coins or not. And most indicators keep showing the supply side remains very tight. And so I think we're in this kind of to repeat the point that I think we have to manage our expectations maybe about the next 12 to 18 months. Understand that Bitcoin is treated as a risk-on asset by many pools of capital, but that the long-term story looks very favorable now, and that if people basically are looking to get into the space, the network just went through a 50% plus correction, and that basically I think that the supply side is still kind of long-term bullish. We can kind of segment into different milestones, and so as Bitcoin went through this process of network adoption, this monetization, in the really early stages, it was retail to retail. The friction points for even getting into the space. I actually remember hearing about Bitcoin in like 2010, and I kind of just thought about it, and I could have figured it out, but because there's so many friction points, I just kind of lost interest. That's true for a lot of people, and you kind of then in say the next cycle of demand adoption, you had exchanges come in and make it easier for people to get in. It still was kind of the industry was that was back in the Silk Road days. Some of these companies had trouble getting banking relationships. It was still very early days. Then the whole 2017 period was more the mainstream adoption. That's where you had these more regulated exchanges. They had banking connections. There was more built up infrastructure around that, and you had some of the early institutions really get into the space. But I think they built a lot of their framework throughout this bear cycle we went through in 2018, 2019. That's where I think a lot of the foundations were laid. Some of these big institutional grade custodians really built up their product offerings in that environment. And so when we had this demand increase in 2020, I think basically we described that this was kind of the year of institutional adoption. After we already had the institutional build out, now we have insurance companies coming in. We have a couple early pension funds coming in. Basically, these larger pools of capital have been more interested, and it's kind of important that the custodians built that foundation in the years prior. So I think we're seeing early signs of it. Basically, I think that the banking industry is still in the early innings of interfacing with the Bitcoin network. And so we've seen, for example, after the institutional grade custodians came in, you started to see some of the investment banks come in. You started to see custodian banks like Bank of New York Mellon get into the space, and now there's firms like NYDIG that are making it easier for commercial banks to offer Bitcoin related services. Basically, a lot of banks have been seeing that people would pull their capital out and send it over to places like Coinbase or other exchanges, and banks are saying, how can we retain more of that in our ecosystem? And so I think basically now you're seeing more and more integration. And so I think there are milestones to watch about more banks getting involved, maybe more insurance companies getting involved. I think another big thing that's really early is the RIA space. So there's tens of trillions of dollars of capital managed by RIAs. And they have all sorts of reporting requirements, rebalancing, needs. They need certain interfaces and certain things. And there are companies now like Swan Bitcoin and others that are starting to roll out more and more services aimed at them. And I think that's going to be a pretty big, I think, adoption story over the next 3 to 5 years as well. And that's still, that's behind the curve of some of these other pools of capital. So I think as we go along, there's just more and more kind of tentacles going out through the various types of capital that have their needs met in terms of bringing their capital into the space.